Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the daily bearish scenario where we are looking for a bigger 3-wave corrective structure, after which we expect continuation to the upside. Here we then look for a zigzag with a 5-wave leading diagonal in a wave A, a 3-wave zigzag to the upside in a wave B, and then look for another 5-wave impulsive structure to the downside in a wave C, moving below the low of wave A at 56k. A common target area for a wave B is the 886 taken from the high to the low of wave A, giving you a target at 71.8k, and the invalidation for this scenario is price taking out the all-time high at 73.8k. If we then zoom in to this wave B, we're looking for a 3-wave corrective structure to the upside in a zigzag, a 5, a 3, a 5 ABC. The most common target area for your wave C is the 1 to the 1.236 trend-based fib extension taken from the low to the high of A to the low of wave B, giving you a target between 69.1k and 71.3k. The 1.618 is also still quite common, but it is above the invalidation, hence the reason that the target box runs up until the invalidation level. We also have some additional resistance in this area. First of all, the white box here, which is where we are right now, between 70.7k and 72k, and then the blue box between 73.1k and 73.6k. In this scenario, the volume and the 0.618 are going to play an important role because at the moment, price here is moving to the upside on increased volume, with most of the volume sitting in this latest impulsive structure to the upside. Now, a wave C does like to end on a high amount of volume, so now we have to wait and see if we get a wave 3 in continuation or if we drop to the 0.618, because in an impulse, the highest amount of volume is by far most common in a wave 3, where you want to see continuation and you don't want to see the 0.618 hit, because after a wave 3 to the upside, you want to see at least a couple of 4-5s, and an invalidation for a wave 4 is the 0.618, which is taken from this low to the high, because the highest amount of volume is in this recent structure to the upside. The previous ranges therefore have to be wave 2s. So if price would move towards the downside and hit the 0.618 at 68.1k, it does increase the probabilities for a deeper retracement to the downside. Time-wise, this wave C is still perfectly fine compared to wave A, taking a fib time from the low of A to the high of A to the low of B, currently ranging around the 2 fib time, which means your wave C is about 2 times longer compared to your wave A. But that is not a problem, as we have seen it before, like we have over here at about 26-27k, where we also had an ABC to the downside, and if we take a fib time from the start of A to the low of A to the high of wave B, then you can see that the low over here of your wave C was made between the 3 and the 4 fib time. Inside wave C, we're then looking for a 5-wave impulsive structure to the upside in a wave 1, 2, 1, 2, 3, 4, 5 inside wave 3, another wave 4, and then a final leg towards the upside in a wave 5. Wave 2 retraced to the golden pocket taken from the low to the high of 1, which is a common target for a wave 2. Wave 4 retraced to the 0.236, which is also a common target for a wave 4, taken from the low of 2 to the high of 3, and then we have this final leg to the upside in a wave 5. Now preferably this wave 5 is not going to hit the 1-to-1 trend-based extension taken from the low of 2 to the high of 3 to the low of wave 4, comparing wave 3 with wave 5. And the reason is that in an impulse to the upside, if wave 3 is already extended, which it is over here compared to wave 1, it has low probabilities that a wave 5 is also extended in that same impulsive structure. The 1-to-1 here is at 72.6k, and if price does move to the upside and hit this level, it reduces the probabilities for a 5-wave impulsive structure, which can increase probabilities for more bullish scenarios. Talking about the bullish scenario, the 112 is obviously the most bullish scenario here, where you have your finished first wave 1, finished first wave 2, and then you look for continuation to the upside. The highest degree Elliott wave count here in green is 1, 2, 3, 4, 5, and inside the green wave 3 we have the blue count 1, 2, 3, 4, 5. Now as you can see, I have two structures on the chart with the dotted lines, either continuation or a bigger drop to the downside and then continuation to the upside, and the reason for that is the 1, 2 that you see on my chart over here. So let me explain. In a double 1, 2, we have a 1, 2 here, and currently I put the 1, 2 over here. And the only reason I did this is to show you the retracement of the wave 2. The most common target for a wave 2 is a retracement to the 0.5 to the 786 Fibonacci taken from the low of 2 to the high of your wave 1. Well, clearly we didn't hit the 0.5. The 382 is an uncommon target. The 236 is a rare target. Not even hitting the 236 is very rare for a wave 2, decreasing the probabilities that this is the high of your second wave 1 and this is the low of your second wave 2. However, if we then move this wave 1 to the right side and also move this wave 2 to the right, removing the 0.236 and counting the same impulse to the upside as in a wave C, then we're looking for a bigger retracement in a wave 2, preferably between the 0.5 and the 786 taken from the low to the high of the blue wave 1. However, what we do see is that the blue wave 1 is then finishing after the 1-to-1 trend-based fib extension taken from the low to the high of the green 1 to the low of the green wave 2, comparing green 1 with the blue 1. Now in an impulse, generally the lower degree 1 and 2 are shorter in time and price, but now this blue wave 1 is longer in time compared to the green wave 1 and also longer in price compared to the green wave 1, which does lower the probabilities for a double 1-2 if you do get a retracement to the downside, and increases the probabilities for an ABC if you do move down. By all means, the structure that we do get to the downside will give us a better idea of the probabilities of then the bullish as well as the bearish scenarios. Now on the daily time frame, as you know, price has hit the 886 as shown in the first scenario, and it is relatively common for price to retrace to the golden pocket, which we see on the lower time frames all the time. Especially the people that have been here for a while have seen that multiple times, and the fibs are taken from this high to the low, with the golden pocket at 67.9k to 67.2k. So let's see how price is going to react at the 886. On the 15-minute time frame, we do have some CVD divergences. We had big bullish CVD divergences here, increasing probabilities to move towards the upside. And now in this local range at resistance, we have a bit of bullish CVD, but also some bearish CVD. So it's a mix, waiting for a bit more clarity locally, and of course proof of either resistance or more proof of support. So if you then go to the probabilities of the different scenarios, then on the 4-hour chart, currently the probabilities are highest for the ABC structure, 3-wave corrective structure to the upside, compared to the bullish double 1-2 scenarios. And simply the reason for this is the retracement that we have here. So on number 1, ABC, on number 2, the double 1-2 that is unfinished, where we still look for a retracement and then continuation. And on number 3, we have a double 1-2 that is finished, and you look for straight continuation to the upside. The only reason that the probabilities are higher for an ABC here is because of the very shallow retracement for the second wave 2 if it is finished, which is this structure over here, not even hitting the 0.236. It happened once before though at 51k, where we had this range over here, and if you would take a fib from this range to the high, then you will see that also here the 0.236 was not hit, but we did get impulsive continuation. But nonetheless, it is very rare that it happens, but it is good to be aware of it. Therefore, a retracement has a higher probability, and depending on the retracement to the downside, we can see what's next with regards to either a double 1-2 or a bigger move towards the downside. We do want to see solid local weakness and proof of resistance though, as we are pushing to the upside on volume, and currently we are ranging at resistance, one more resistance box above, just in case we pass the current resistance where we're at. On the daily time frame, naturally, the probabilities are then higher for the zigzag compared to impulsive continuation because of what I explained over here for the 4-hour probabilities. So the probabilities on the daily follow what we see on the 4-hour chart. Again, retracement sooner or later has a higher probability, and the type of retracement will give us the info that we need. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.